When it comes to investing in the S&P 500, two popular options are the VOOG and VOOV ETFs. Both track the performance of the S&P 500 index. But there are key differences between them. First, let's look at what they have in common. Both VOOG and VOOV are offered by Vanguard, a well-known and reputable investment management company. They both aim to provide broad diversification and low costs to investors. Now, let's dive into the differences. The main distinction between VOOG and VOOV is the investment approach. VOOG is an ETF that invests in growth stocks, while VOOV focuses on value stocks. This means VOOG tends to track the performance of growth-oriented companies in the S&P 500, while VOOV tracks the performance of value-oriented companies. In terms of portfolio composition, VOOG and VOOV have different weightings of the same underlying stocks. For example, VOOG may have a higher weighting in technology stocks, while VOOV may have a higher weighting in financial stocks. When it comes to performance, VOOG and VOOV have different historical returns. VOOG has tended to perform better during periods of high growth, while VOOV has performed better during periods of economic downturn. In terms of fees, both VOOG and VOOV have low expense ratios, but VOOG has a slightly lower fee. This can make a big difference in the long run, especially for investors with large portfolios. Ultimately, the choice between VOOG and VOOV depends on your investment goals and risk tolerance. If you're looking for growth and are willing to take on more risk, VOOG may be the better choice. If you're looking for value and stability, VOOV may be the way to go. As with any investment, it's essential to do your research and consider your overall investment strategy before making a decision. It's also important to remember that past performance is not a guarantee of future results, and it's always a good idea to diversify your portfolio to minimize risk. By understanding the key differences between VOOG and VOOV, you can make a more informed decision and choose the S&P 500 ETF that best aligns with your investment goals and risk tolerance.